Welcome back to the Simple Retirement channel, where we make retirement simple. Today, we're diving into the world of Social Security benefits, a critical component of many retirement plans. But there's a catch that many aren't aware of. These benefits could potentially become taxable, depending on your other sources of income. In the course of this video, we'll be focusing on 3 types of income. First, we'll look at retirement withdrawals. For the sake of our discussion, we'll be considering an annual withdrawal of $12,500. Next, we'll discuss part-time work. We'll assume an annual part-time income of $15,000. Lastly, we'll delve into Social Security income, considering an annual benefit of $25,000. These 3 income sources may seem independent, but they can intertwine in ways that influence your tax obligations. In this video, we'll explore how these sources of income can impact the taxability of your Social Security benefits. Starting with retirement withdrawals, let's consider an example where you're withdrawing $12,500 annually. Now, you might be wondering, how does this affect my Social Security benefits? Well, let's delve into that. Retirement withdrawals can indeed have tax implications. When you take money out of your retirement account, it's considered income. But here's the catch. It's not just about the amount you withdraw. It's also about your other income sources. And yes, that includes Social Security benefits. The Internal Revenue Service, or IRS, uses what's known as combined income to determine if your Social Security benefits are taxable. This combined income is the sum of your adjusted gross income, non-taxable interest, and half of your Social Security benefits. Let's break it down. Say, for instance, you're pulling out $12,500 from your retirement account every year. That's your retirement withdrawal. Add to that any other income you might have, like interest from savings or dividends from investments. Now, let's not forget about your Social Security benefits. In our example, let's say you're getting $25,000 annually from Social Security. You need to add half of that amount, which is $12,500, to your other income. So if the sum of all these income sources crosses certain thresholds, a portion of your Social Security benefits becomes taxable. For an individual, if the combined income is between $25,000 and $34,000, up to 50% of your Social Security benefits might be taxable, and if it's more than $34,000, up to 85% might be taxable. So, in our example, the $12,500 retirement withdrawal could potentially make a portion of your Social Security benefits taxable, depending on your other income. It's a balancing act, and understanding these implications can help you make more informed decisions about your retirement withdrawals. Now that we've seen how retirement withdrawals can affect your Social Security benefits, let's move on to part-time work income. Imagine you're working part-time during your retirement and earning an annual income of $15,000. That's a nice little boost to your retirement income, isn't it? But how does this affect your Social Security benefits? Well, the Internal Revenue Service, or IRS, doesn't just let you earn this additional income without taking a closer look. Depending on your total income, a portion of your Social Security benefits may become taxable. Now, you might be wondering how exactly this works. The IRS uses a formula to calculate whether you will owe taxes on your benefits. This formula includes all your income, including any part-time work, retirement withdrawals, and half of your Social Security benefits. If the sum of these incomes exceeds a certain threshold, which is $25,000 for an individual or $32,000 for a couple filing jointly, then up to 50% of your Social Security benefits could be taxable. If your income exceeds $34,000 as an individual or $44,000 as a couple, up to 85% of your benefits could be taxable. So, let's say you're earning $15,000 from part-time work, withdrawing $12,500 from your retirement savings every year, and receiving $25,000 in Social Security benefits. Half of your Social Security, that's $12,500, is added to your other income. That gives you a combined income of $40,000. If you're filing as an individual, then you're in the zone where up to 85% of your Social Security benefits could be taxable. As we've seen, both retirement withdrawals and part-time work can have an impact on the taxability of your Social Security benefits. It's essential to keep these considerations in mind as you plan your retirement income strategy. In the next scene, we'll delve into the specifics of Social Security income. So let's now consider Social Security income. Finally, let's talk about Social Security income. In this scenario, you're receiving an annual Social Security income of $25,000. Now, you may be thinking, Social Security income, that's tax-free, right? Well, not necessarily. The tax implications of your Social Security income can be quite complex, especially when combined with other sources of income. Here's how it works. If your only source of income is your Social Security, then it's likely that your benefits will not be taxed. However, if you have other income like we discussed previously, from retirement withdrawals or part-time work, then a portion of your Social Security benefits may indeed become taxable. To determine whether your benefits are taxable, you'll need to calculate your combined income. This is your adjusted gross income plus non-taxable interest plus half of your Social Security benefits. In our example, your combined income would include your annual part-time work income of $15,000, retirement withdrawals of $12,500, and half of your $25,000 Social Security income. Now, if you file a federal tax return as an individual and your combined income is between $25,000 and $34,000, you may have to pay income tax on up to 50% of your benefits. More than $34,000 up to 85% of your benefits may be taxable. In our scenario, adding up all these income sources, your combined income would exceed the $34,000 threshold, meaning up to 85% of your Social Security benefits could be taxable. As we've explored, all these income sources can potentially make your Social Security benefits taxable. It's important to plan wisely to minimize the tax impact on your retirement income. In conclusion, it's important to understand how different income sources can impact the taxability of your Social Security benefits. We've taken a deep dive into the world of retirement withdrawals, part-time work income, and Social Security income, and how they can affect your tax situation. We've seen how a retirement withdrawal of $12,500 a year can play into this equation. We've also discussed the implications of earning an annual part-time income of $15,000 during your golden years. And let's not forget about the impact of a $25,000 annual Social Security income. These are vital pieces of the puzzle when it comes to planning your retirement and understanding the tax implications. The key takeaway is this: careful planning and a good understanding of these elements can help you navigate the tax landscape in retirement more effectively. Remember, a well-planned retirement is a simple retirement. Thank you for watching the Simple Retirement channel, where we make retirement simple. Please like, subscribe, and hit the notification bell if you found the information helpful.